Ripple isn't entering Brazil. It's deploying an entire financial system. That distinction matters more than it might sound at first, because the difference between a company entering a new market and a company deploying infrastructure into a new market is the difference between a sales motion and a structural transformation. When a technology company enters a market, it brings a product, tries to find customers, and competes for market share. When a financial infrastructure company deploys into a market, it embeds itself into the operational fabric of how money moves, how assets are held, how transactions are settled, and how institutions manage liquidity. Those two activities look similar from the outside. They look very different from the inside. What Ripple has announced in Brazil, in terms of the breadth of services, the regulatory commitments, and the institutional relationships already in place, looks much more like the second kind of move than the first. And understanding why that matters requires understanding both what Brazil represents as a financial market and what it would mean for a single infrastructure provider to become the backbone of how its financial institutions move value. Brazil is the largest economy in Latin America and the 9th largest in the world by nominal GDP. Its financial sector is large, sophisticated, and increasingly digital. Brazil was one of the first major economies to launch a real-time payment system that achieved genuine mass adoption. Its PIX system, launched by the central bank in 2020, now processes more transactions monthly than any other payment method in the country, including credit cards and traditional bank transfers. The appetite for financial innovation in Brazil is not theoretical. It has already demonstrated itself at scale in the domestic payments context. What Brazil has not yet fully solved is the cross-border dimension. International payments into and out of Brazil remain expensive, slow, and subject to the same correspondent banking inefficiencies that affect cross-border payments globally. The Brazilian real is a volatile currency, which makes pre-funded foreign exchange accounts particularly expensive to maintain. Remittance corridors to and from Brazil, which serve a significant diaspora population, carry fees that are substantially higher than domestic payment costs. The institutional infrastructure for digital asset custody, tokenization, and programmable settlement in Brazil is still in early stages. These are precisely the gaps that Ripple's institutional product suite is designed to address. The alignment between Ripple's specific capabilities and Brazil's specific financial infrastructure needs is not coincidental. Ripple's president Monica Long has stated explicitly that Latin America has always been a priority market, and Ripple has maintained a local office in Brazil since 2009. This is not a new relationship. It is a relationship that has been developing for 15 years and is now reaching a new phase of institutional depth. The full scope of what Ripple is deploying in Brazil is worth enumerating precisely because it illustrates the difference between a single product launch and a comprehensive infrastructure rollout. The first layer is payments. Ripple's payment infrastructure, which has processed over $100 billion across more than 60 markets globally, enables institutions to send, receive, and settle funds in both traditional fiat currencies and stablecoins faster and more transparently than conventional correspondent banking allows. Brazilian fintechs and financial institutions, including Bank, Nomad, and others have already integrated this infrastructure to address cross-border liquidity and payment challenges. The second layer is custody. Ripple Custody is expanding into Brazil with bank-grade security, real-time compliance tooling, and deployment options designed for regulated institutions. Custody is the foundational service that regulated financial institutions require before they can hold digital assets in any meaningful way. Without institutional-grade custody infrastructure that satisfies the requirements of local regulators and auditors, no bank or asset manager can integrate digital assets into its balance sheet or product offerings regardless of how compelling the technology is. The third layer is prime brokerage and treasury. Ripple Prime provides clearing, financing, and execution services for institutional participants, while Ripple Treasury offers treasury management capabilities that handle the kind of liquidity and cash flow operations that financial institutions run continuously. These are not products that retail traders use. They are the operational infrastructure of institutional finance, delivered through a blockchain-native stack. The stablecoin layer sits at the intersection of all these services and deserves specific attention because it represents the settlement currency that makes the entire stack function in a way that is both fast and stable. RLUSD, Ripple's dollar-denominated stablecoin, has reached over $1.5 billion in market capitalization and is expanding across Latin America through partnerships with major exchanges and fintechs, including Mercado Bitcoin, Foxbit, and Ripio. A stablecoin is not just a digital dollar. In the context of institutional finance, it is a programmable settlement asset that can move between counterparties, across chains, and through automated smart contract logic with the speed of a blockchain transaction and the stability of a fiat currency peg. For Brazilian institutions conducting cross-border transactions, the ability to settle in RLUSD rather than waiting for correspondent banking chains to clear creates a fundamental improvement in working capital efficiency. For institutions that want to offer digital asset services to their clients, RLUSD provides a regulated, compliant on-ramp that operates within the legal frameworks that Brazilian financial regulation requires. Brasa Bank has already issued a real-backed stablecoin on the XRP ledger, and a USBD stablecoin from the same issuer demonstrates that local institutions are not just passively adopting Ripple's infrastructure, but building their own products on top of it. The institutional adoption signals coming out of Brazil are specific and measurable rather than speculative. Partners like Just Token are using the XRP ledger and Ripple custody to issue and deliver tokenized assets at scale, with nearly $100 million already settled on-chain and $1.7 billion in assets tokenized. Trax Bank was the first institution in Latin America to use Ripple's crypto-enabled payments and on-demand liquidity in Brazil, focusing specifically on foreign exchange and cross-border payment flows. Banco Rendimento has integrated Ripple's ODL to enhance remittance flows across Latin American corridors. These are not pilot programs or proofs of concept. They are live operational deployments handling real transaction volumes for real institutional clients. The fact that these deployments are happening with named, regulated financial institutions rather than anonymous early adopters is significant from a regulatory and reputational perspective. When established banks integrate an infrastructure provider into their core payment operations, they conduct extensive due diligence, legal review, and regulatory consultation before signing any agreement. The presence of multiple named Brazilian institutions in active operational deployment with Ripple infrastructure represents a level of institutional validation that press releases and partnership announcements cannot substitute for. The Mastercard and BVNK development connects Ripple's Brazil expansion to a larger global strategic picture that is worth understanding carefully, with the appropriate level of precision about what is confirmed versus what is interpretive. BVNK is a stablecoin payments infrastructure provider that uses Ripple on the XRP ledger and SWIFT for US dollar movements, and can now utilize RLUSD for interbank settlements through standard custody and trust, a Ripple-owned entity regulated by the New York Department of Financial Services. Mastercard announced the acquisition of BVNK, which means that when the acquisition closes, Mastercard will own a company whose settlement infrastructure runs in part on the XRP ledger through the Ripple custody and stablecoin stack. What this does not mean is that Mastercard has made any public commitment to using XRP or Ripple infrastructure at scale within its global payments network. What it does mean is that the infrastructure connections now exist at an institutional level between Mastercard's global payments network and Ripple's blockchain settlement stack through BVNK. Whether Mastercard chooses to expand on those connections, maintain them at their current scale, or eventually migrate BVNK to different infrastructure is a business decision that has not been publicly disclosed. The significance of the development is the fact that a company of Mastercard's scale was willing to acquire a business whose infrastructure is intertwined with the XRP ledger, which implies that Mastercard's due diligence teams reached a judgment that this was not a liability. In the current regulatory environment, for a company as compliance-focused as Mastercard, that judgment carries meaning. The bigger picture here is about a structural transition that is happening across global financial markets simultaneously, and Brazil is one of the more visible examples of how that transition is playing out at the ground level. The transition is from crypto as a trading and speculation activity at the edges of the financial system to blockchain infrastructure as the operational layer of the financial system itself. The institutions building in this space right now are not building trading products. They are building custody systems, settlement rails, stablecoin payment corridors, and tokenization platforms. Guggenheim, Moody's, Bank of New York Mellon, and Ono Finance are all documented as actively building and tokenizing assets on the XRP ledger. These are not crypto-native companies. They are traditional financial institutions that have made operational decisions to integrate blockchain infrastructure into their core workflows. That kind of adoption happens quietly, through procurement decisions and technology integrations that rarely generate headlines, but that create the durable structural positions that determine which networks become embedded in the financial system over time. The potential implications of what Ripple is doing in Brazil extend beyond the specific market. Brazil is one of the largest emerging market economies in the world, and if a comprehensive blockchain-based financial infrastructure stack can demonstrate both technical reliability and regulatory compliance at institutional scale in Brazil, it creates a template and a reference case that accelerates consideration of similar deployments in other large emerging markets. The cross-border payment corridors connecting Latin America to the United States, to Europe, and to Asia represent trillions of dollars in annual flow that currently runs through expensive and slow legacy infrastructure. The treasury management and custody needs of financial institutions across the region represent an addressable market for institutional blockchain infrastructure that has barely begun to be served. And the competition from other blockchain networks for this institutional infrastructure opportunity is real. Ethereum, Stellar, and various other networks are also pursuing institutional adoption strategies in emerging markets. The question is not whether blockchain infrastructure will become relevant to emerging market finance. The question is which networks will be most embedded in which markets when the critical adoption decisions are made by regulated institutions with long switching cost cycles. The risks embedded in this expansion deserve honest acknowledgement rather than dismissal. Regulatory uncertainty remains a genuine variable. Ripple has applied for a VSB license with Brazil's central bank, but the regulatory framework for virtual assets in Brazil is still developing, and its ultimate shape is not fully determined. Operating under a provisional or application-pending regulatory status introduces compliance risk that fully licensed operations do not carry. Adoption by individual institutions, however promising the current signals are, does not guarantee adoption at the system-wide scale required for the network effects that make infrastructure economically dominant. Each institution that integrates Ripple's stack is making an independent business decision based on its own cost-benefit analysis. And those analyses can change if competitive alternatives improve, if regulatory frameworks shift, or if the economics of the integration do not perform as expected in live operations. Competition from other infrastructure providers, including networks with different technical architectures and different regulatory profiles, means that no single provider's current market position in any geography should be interpreted as a permanent advantage. Financial infrastructure history is full of examples of systems that seemed entrenched before being displaced by something faster, cheaper, or better regulated. None of these risks negate the significance of what Ripple is building in Brazil. They are simply the honest context in which that significance should be evaluated. This may not look like a headline moment. There is no single announcement that changes everything overnight. But this is how financial systems actually get built. Quietly, through institutional relationships, regulatory filings, technology integrations, and the accumulation of transaction volumes that make a network progressively harder to displace. The infrastructure layer of the financial system has never been built by headline. It has always been built by operational decisions made by institutions solving real problems with real money on real timelines.